Hi, everyone. Thank you for joining us today. My name is Elizabeth Becerril. I'm the Regional Manager for Community Programs at Techstars in Latin America. And I have the privilege to go with you through this session. We are talking with very terrific people, and they are going to share with us something all the knowledge they have about what is the investor's perspective on how to find the right founder team. This is a session presented by Invesco, and I hope you enjoy this session. And please remember that you have on the right your chat to ask as many questions as possible to have a really great and interesting conversation. And first, I want to introduce our panelists. I want to begin with Donny Lochan. He is the Chief Technology Officer at Invesco. And hopefully all of our panelists can share a little bit from them and what they're doing and what they want to do in this session.
Great, thank you. Thank you for having me here. My name is Donny Lochan, Chief Technology Officer for Invesco, living here in Atlanta. I look after technology at Invesco, which includes what I call sort of normal and regular technology, but then also the innovation and emerging tech that has a connection into the startup. I'm also represent Invesco as one of the founding members of Engage, which I will not steal the thunder, and I'll let Blake go through what that is. So thank you for having me. Over to you, Blake.
Sure, thanks. So Blake Patton, founder and managing partner of Tech Square Ventures, and we're an early stage venture capital firm, and we're proud, as Donnie said, to be the venture partner in Engage. So we partnered with Georgia Tech and 11 leading companies, including Invesco, and working with Donnie and Dave and their CEO, Marty Flanagan, to found a collaborative corporate innovation and venturing platform. And so what that means is that we work with our corporate partners from across all these industries, and from financial services and Invesco to airlines, Delta, UPS, Home Depot, broad range of industries, and work to understand and help them accelerate their innovation roadmaps and needs, and help source and identify and invest in and match them with startups that are relevant to those innovation roadmaps. So glad to be here. I think this might be the first time I've been in a room with Dave and Donnie where they weren't dressed nicer than me. So this is great.
Hi, I'm Dave Dowsett. I look after our tech strategy, innovation, and planning, which also includes emerging technology and to double down on being intentional about innovation. The whole idea for my role is to work with partners around the world. I can really align problems that we might have across our value chain and talk to them about how we could solve them. You can imagine that comes from research, that comes from partnership with startups, one of the reasons I'm here, or us building it ourselves by the intel that we learn from being out there. I'm also based in Atlanta. I've been here for 3+ years.
Okay, thank you very much for your words. I want to kick off this panel asking a question to Blake about what is the criteria that investors uses in order to find that special startup. I know that this is a question that you heard millions of times, but it will be nice to hear from you and also from the Engaged perspective.
Yeah, no, it's you're right. It's the most common question, and every investor you ask will give a little bit different answer. But so maybe I'll start with kind of broad, and then I'll talk more specifically about Engage. So there's lots of things we look at in evaluating startups or companies that we're interested in investing in. So of course we look at everything from product to competitive advantage, but there's 3 things we have to get right, and that is the team, the market opportunity, including the timing, and then alignment. And alignment means a lot of things, but it's their definition of success looks like our definition of success, and it's aligned with our our goals and our investment thesis. So for us, we know we're backing that team. We know we're backing a founder, and we're betting on their vision as their superpower, and that we're signing up to help that team succeed. So that's super important. Obviously, we have to be right about the market opportunity, and I think what to kind of segue to the other part of your question about Engage, what we love about Engage is it really gives us this advantage on that part of it, on assessing market opportunity, in particular timing. It's not usually that difficult to get our arms around what the future looks like. What's hard to figure out is how we go from where we are now to that future. What does that transition look like? What does that timing look like? And so with Engage, we get this amazing opportunity to work with them to understand their innovation needs and goals. But part of what we get out of that is really great insight from their business unit heads about what are actually the dynamics happening in that market that what caused that to be what they're focused on, and what is that timing? Are they thinking about it, for knowledge? Are they actually piloting it, or are they really moving forward, with that as production or moving forward in that whatever that industry or technology change is. So we get a really unique insight into that market opportunity and timing by working with these corporate partners. And then, of course, that's a big part of the answer to the question too. So what we're looking for are enterprise and marketplace technologies that line up with the direction that these corporate partners are going and the innovation needs they have. So it starts with that sourcing, and then we work with those corporate partners. They help us diligence those opportunities. We're super fortunate to be able to tap into Dave and Donnie and their teams and help us give us feedback and market perspective. And then once we narrow that down, and once we do that, we include them in the selection. And then, of course, once we invest, they help us help define those companies' roadmaps and help them succeed. So it's the short version is it starts with filtering against our investment thesis and our investment needs, which is largely driven by the needs of our corporate partners. And then we focus really hard on the team, the market opportunity, and alignment, with our goals.
Going deeper in that, what do you think, Dave and Donnie, about this interaction with the funders? I know that sometimes funders and corporations go in to different speeds, and there are certain way to work between each other. What are the things that you can do to help that relationship to collaborate together?
I can give it a go. The thing that we always focus on, and that will always make the partnership go better, is focus on the true business problem that we have and that the startup can solve. I think as soon as you miss that, you start wasting a lot of cycles. Particularly in my role, we're looking for parts of our value chain that have gaps, there are potential that startups have been formed to actually solve against. And truly understanding the problem we have and truly explaining how the startup can solve that problem is where you'll get speed. I think sometimes what I find is founders can come in and promote the startup as solving nearly world hunger because naturally they're very proud and passionate about what they have. But I really want to hear the problem that they're solving. What is my problem that you're going to solve? And as soon as you get that, you will move fast. The other thing I would encourage is that when you find that contact within an organization, especially a large global one, stick to that partner and make sure you form that partnership, because it is about a partnership. If you start jumping around the organization trying to attack the same problem from different angles, it just creates more noise, and those things just slow things down. So stick to the problem and create that partnership and work that partnership. Donnie, do you have a view?
Yeah, look, I would add to what Dave says, maybe some advice for corporations, right, in terms of how to work with startups, as well as obviously what Dave said on the startups themselves. I think for corporations, Dave mentioned the importance of, what we call the quarterback, that one person that acts as the navigator for that startup. The other thing that I would recommend, and Invesco has done this, is to, we call it next step, but basically it's a intentional innovation program that you can think of as just a different track. Most organizations, corporations have to spin up new initiatives. It's a project-based approach, or to get a new vendor in, it's large vendors. What they need is a track for startups, and it's a fast track. Yep. So, for example, if you're doing an NDA, and right now it's really to do a proof of concept, well, you don't need to do the 50-page document that you give the startup to go fill in. You have a cut-down version. So I think for corporations, it's to really have that fast track that's tailored to startups. And then on the startup side, as Dave said, the lessons there, I think, are great ones.
Yeah, I'll add one more thing. I think one of the things that makes Engage unique is we have brought together these 11, 12, large corporations across industries. And so part of what we do is help solve for that in both directions. So we help be an interface to help coach those startups through that process. We also help work with the corporate partners to help them understand the reality of the stage and the best way to partner with those startups. And then the corporate partner, the Invescos and the other corporate partners, they get the benefit of the cross-corporate learning of working across each other. And, since this is Atlanta Startup Week, I think that is something that's super special and unique about Atlanta. I'm not sure where else in the world you could get the CEOs of, 10 plus Fortune 1000 companies to come together and agree to collaborate in the way that we're doing with Engage. And as Donnie said, part of what makes this structure unique is those CEOs, in addition to being committed to Engage and investing in Engage and being part of the fund, they are also the CEOs of those companies serve on our board. And then each of those companies, as Donnie mentioned, we have what we call quarterbacks that help us navigate and connect us with the appropriate business unit heads inside the companies. So I share that because I think there are other programs that, provide certain degrees of introductions between corporate partners and startups. But this is special, and I think it's special because we started here in Atlanta, and there's this unique spirit of cooperation, and we have this advantage of these different companies across non-competitive industries collaborating together.
That's definitely something very unique. I only can tell from Latam, but I've never seen something like this, at least in Latin America. And on the follow on with this topic, I also think that these questions you have heard a million times before, but a lot of funders ask how to approach investors, and in specifically to corporate investors, because it's sometimes difficult to navigate all the people that can help you as a founder or can connect you with a specific corporation. So I would like to know what are your advice there? How to make that first connection or find the right network to plug in?
Yeah, I'll let Dave and Donnie add more to this on the corporate side, but so the first thing is the best warm introduction you can get to an investor is from another successful entrepreneur, especially an entrepreneur in their portfolio. That's our customer. That's who we have to please. So if an entrepreneur asks us to meet with someone, we're going to do that. So that, that's a really short answer, but that's probably the best introduction. Cold reach outs are certainly hard, not because we don't want them, but because the volume is so high, it's hard to process. But I'm going to pause there for just a second, because I think that's a little bit what makes us unique, and part of what makes Engage unique is that, we are starting with certain themes and we call it Insights Engine, where we work with these corporate partners. We distill that into certain insights that we see across the partners, and then we actually proactively source against it. So a lot of our sourcing, the first contact is actually outbound. It's actually us having looked out across the marketplace, looking for startups solving the problems that Dave, as Dave put it, that they care about. So a lot of times we're proactively sourcing. And then I guess to finish it up, just not to be too flippant and terse about it, because I know it's really hard as an entrepreneur. I spent the first 20 years of my career doing exactly that, building early stage technology companies as an entrepreneur. So other ways are, incubators and accelerators in your region. The service providers like your lawyers and accounting firms are very good introductions and connections. But certainly a warm intro is best. And then for the corporations, I'll let Dave and Donnie talk about other avenues, but certainly Engage is built to help do that. We're built to help curate all the activity down to what matters, what's happening at the edge of their industries, the edge of their markets, and against their innovation roadmaps. And so we exist as one of those bridges to do that. But I'll let Dave and Donnie chime in more about other ways.
Yeah, I can't stress enough the importance of the partnerships with companies like Engage for this. And the amount of emails I get every day that are just cold emails or cold calls about startups pitching to me, and they don't understand the problems that I need to solve. And I would say I just don't engage that way. And when we partner with companies like Engage and we're sharing the problems that we have across the value chain that we have, it's that partnership that does lead to those warm introductions, whether it leads to investment or just partnership or whatever it might be. You want to go to someone that's kind of aggregating what they see out in the landscape. They're either telling us what we don't know, which we call our early warning system of threats coming over the horizon that we need to be informed of, or more so just going and telling these are probably our 15, 20 problem statements that we have. Who do you think you could introduce me to that will solve these? And having those connections around the world is how we do it. It's far more effective and efficient too, because the warm introduction means there's a level of vetting too over just those cold emails that just come in all day, every day.
Yeah, I would add, if you look at a corporation like Invesco in particular, it depends on, as a startup, what you're looking for. So for example, it may be a classic funding opportunity, and Invesco has, venture funds and so forth that do more classic, I would call it, financial driven approach to invest in companies, right? Then where Dave and I come from is it has to be financially viable, but it's much more of a capability-driven approach. And that's when, as Dave said and Blake says, we spend time defining the problem statement, and then we leverage partners like Engage to do the search for us, as it were. And then that's much more of a trusted advisor, I would say. There are other avenues, like I've taken startups. Again, if you're coming at it from a capability standpoint, who are the avenues that can understand the needs that then can do the referrals for us? So sometimes we've used consulting firms, right? Because certain startups, depending how mature they are, they will partner up or at least go to the consulting firms, the implementation partners, so that they're aware of the solutions that they have, so that then when we engage with consulting firms, they're bringing those referrals as well. So it's really, if you're coming at it from a capability solution standpoint, it's to find those avenues that are more trusted partners to the corporations like Engage.
Yeah, I think we have a question from the audience that I think it can help us go through this conversation. That is, like, where are you sourcing your deal flow? And something that I heard from what you said is that you obviously trust on the people you already have worked on, past founders, people that recommend other founders, and also like specific organizations or networks that have a pool of startups that are in the right stage for you or for certain corporations to invest. Going deeper there is, what is the right stage for a startup to receive investment from a corporate? What will be the characteristics that they are going through in order to be a good match for you?
Yeah, look, I think again, if we talk about the corporate for a minute, and then corporate leveraging the startup from a capability solution standpoint, because like I said, there are other avenues where a corporate may be looking more for an investment as a pure investment, right? So I'm talking about the value of leveraging that startup, not just as an investment, but actually leveraging the solution that they have to the betterment of the problems that we have to solve at Invesco. So you could probably guess, the first thing I would say is the capability itself, right? Does that capability match and solve the problem statement that they've mentioned before, that we have to take the time to identify and document clearly. There's a couple other things that we look for, though, when we look at the startup and then the level of engagement of that startup. The second is the broadness of that capability across our business units, right? And that's not to say we won't look at a startup if it's just in one area, but obviously if we see an opportunity to take that solution, maybe not as it is right today, but maybe we see tomorrow where it could go. That's the optionality that we look for. And then the third area we look for is, I just call it hidden gems, right? There are many times where we will work with a startup, and I'll give you an example. We had a startup that was looking at the Internet of Things in the railway industry. Great solution, and you're looking at that. When we looked at that, we saw that the hidden gem there over time with the data they actually collected and the power of that data to Invesco's portfolio manager and investors. So I think it's the capability, the core capability, the broadness of that capability, and then are there any, in quotes, hidden gems that we believe we could help the startup monetize that maybe they weren't aware of initially.
That's pretty interesting about the hidden gems, because I have heard of it with a lot of investors through our conversations. It's very difficult to find those gems. And something that the audience is asking us is, given your reliance upon your network, how do you mitigate against bias and relation to people of a certain gender, socioeconomic background, etc.? I think that's a really good question.
Yeah, I mean, I can give it a first part if you want. From our perspective, we want to find partners to solve our problems, and that's really what it is. We have a fairly well-sized team within our organization that, for example, partners with Engage, and to make sure that we are talking about the problems we have and the delivery of those problems that we have. And that team is made up of many, a very diverse demographic too, to make sure that there isn't bias from such. But for me, I just want to find something that solves the problem. And so that's kind of how I remove that. And being connected to many entities externally and having more than just one person internally partnering with those, like behind the scenes, just to make sure we're doing the due diligence, I think is how we mitigate against that.
Yeah, I'll add from the venture perspective. I think it's a great question, right? And it's the problem we're, all wrestling with. And we've done a few things on the Engage side. Working with our corporate partners, I think as Dave said, right, the barrier is not the desire to connect with the entrepreneurs solving the problems, but recognizing as you phrased the question, that today, right, there's not equal access to those networks, and so how do we make sure that we are challenging ourselves to find those entrepreneurs. So one of the things we did early is we pulled together the heads of diversity from across our corporate partners, and we pulled them together into a group and actually had a discussion with them so that we understood, what it looked like from their side, and also actually, frankly, to get their advice, right? That's a problem they had been focused on for a long time. So we took that step and learned a lot about how we could help on our end in terms of the, putting startups through that process and how that process worked with the core partners. And then on our end, look, we recognize it's about opportunity. I think that the technology community as a whole has to do a better job, figuring out, that inclusive. There's lots of answers to that start way upstream with education, but we are working hard, to break out of those just standard. But again, I think one of the great things, if you look at the Engage portfolio, we all have, I certainly won't call it where it needs to be, but we've actually done a pretty good job compared to the industry with diversity. And I think it's because we start out proactively sourcing against a problem. So it's not just reliant on who we see because of our networks. We see, we proactively are looking for entrepreneurs solving those problems. So we sometimes benefit by not accidentally getting that filter of our network. So I see Donnie moving, but it looks like we might have lost Dave. And
oh no, I'm here.
I see him.
Okay.
No. I see
the internet on my side then.
I think it was Blake.
It's me. Okay. We'll blame it on Georgia Tech's internet.
We've learned so far.
Hey, we live on that's the virtual, so it's all good.
Yeah, I think everything's good. We've learned so far that how founders
Use our moderator though. You must be having some internet issues.
Oh, do you hear me? Hello. I think we lose some people.
Hi, can you hear me?
Hi again. Yes.
Dave,
I can hear you. Can you hear me?
I don't know what happened. We maybe we're on the free version and the time, it's like Zoom and you have to come back in.
Okay.
Yeah, I don't see Blake.
Have everyone, right?
Okay. I think everyone's I think we're still live. We just lost the moderator. Maybe I'll look at some of the questions. I'm hoping we're live. We'll see.
Yeah, those should be talking to ourselves.
Does Invesco feel you have too few diverse suppliers in your supply chain? Or is it a matter of just getting the best supplier? And if not, so it's about diversity on just suppliers in general. Yeah, we have our procurement group actually has, okay, we're back. Sorry.
I think we're back. Sorry about that. I don't know what's happening right now.
No problem.
I think you were reading a question from the audience.
Yeah, there was a question on, excuse me, Invesco and diversity of suppliers. Excuse me, and what I was saying was yes, in our procurement, that's actually a criteria that we have. In fact, for the work we do for our investors and funds and so forth, it's actually a criteria that they validate, etc., and that we have gone more diverse in terms of picking suppliers and that. So it's very much baked into our process.
Sorry about that. I have a big dog, and this is times of calls from the office.
All challenges are being sent now.
Exactly.
Sorry about that. I think this is just the timing. I wanted to go back to our conversation about.
Yeah, just so you know, Blake is waiting for approval. I think he's in the waiting list or something.
I already approved him, so I think it's just a matter of a little bit of time.
Okay.
Something that we learned so far is that how founders can join the engage and connect with you in order to find opportunities, to connect with corporates. And also we went through the criteria that usually taken in account in order to find the right startups. But something that we haven't discussed is, like, when do you think that funders need to raise capital? Like, when is the right moment and how much money it's usually the fundraise goal for startups that are partnering with you?
I think it's kind of hard from my perspective to talk about when is the right time to raise money and how much money they've had to have had before. From my perspective, what I'm looking for is a working product. So whatever it takes to get there, obviously, least amount of resources suit the startup. But for me, I think coming to me and talking about what they need to get to the end, which might be in years to come and cost investment, we would then look at it as an ROI type of investment, not a capability-led investment. So I think, as that I can't answer on a specific investment number, that's going to be more Blake. But for me, I need to see a working product before I'm interested in going to any form of further conversations.
Yeah, look, I'll let Blake join, so I think he's probably the best one to answer that. But I would repeat what Dave said. I think from our standpoint, we're looking for companies who are looking to raise capital to scale the solution, not necessarily build out the solution. That would be a little too early for us.
Yeah, maybe I'm sorry, I got the hook somehow. So maybe you can repeat the question. I didn't hear the question.
Yeah, we were talking about when is the right time for startups to find corporate investors and usually how money they raise.
Yep. Well, I think broadly the right time to find investors. The way we think about it is we look at what are the key milestones for these companies, right? So what are the points along their journey that basically decrease the risk that startup or that vision is not going to succeed, and we look at how much capital it takes to get from each of those milestones. The worst mistake an entrepreneur can do is try to raise money in between those milestones. Those are the points where your company's worth more. You might have made a lot of progress, but until you hit those risk reduction points, that's really what matters. So first of all, when we think about how much and when, we tend to think of it around milestones. And then when we think about, when is it a right time? One of the things I should share is that Engage was structured a little bit to help solve that problem. So Engage is structured as a venture fund. And even though the investors in that fund are the corporate partners, those decisions are made, independently. And we do that on purpose so that, that it is appropriate for earlier stage companies to be able to go ahead and leverage that advantage of having those partnerships with those big companies without some of the challenges that might come in an earlier stage, corporate investment. But there's no one single answer to when is it ready for corporate investment. What we care about is the go-to-market strategies, and then working with these corporate partners to help you put that into action faster, whether that means a partnership, a customer, or whatever. And so when those corporations can meaningfully accelerate your go-to-market opportunity, that's the right time, right, to figure out what a partnership with that company, with that big company looks like. That may or may not include an investment. It can include working together with them in all sorts of ways.
Some people from the audience is asking about specific metrics. Like when we're talking about you have to reach certain milestones in order to take the next step. In those milestones, do you have criteria like what should be the monthly recurring revenue that startups need to have in order to be in a good stage to be part of a pilot with a corporation or be invested?
Yeah, I think it's actually two separate questions. So milestones don't always equal specific metrics. So there's not one metric that everybody has to get to. So just getting to X amount of revenue certainly is a milestone. But what we're really looking at is for that individual company, what's the specific, milestone, what's the specific risk. So all revenue is a proxy way of measuring that, yes, customers will actually pay you to do this. And how much revenue that is depends on your business model and what that level of traction looks like. In terms of working with corporate partners, I don't see, Donnie and Dave can give a better answer. I don't see our corporate partners judging the startups based on the amount of revenue they have. I think they look at that revenue in relation to that business model, and they judge whether or not that company is going to be able to scale to whatever opportunity that big company is thinking about doing with them. And what we tend to do is we tend to adjust what we're talking with the company about to match the reality of the stage that startup's in. So it may not be that it should be rolled out wholesale, across whatever that opportunity is. It might be that a pilot is the appropriate first step. And so our corporate partners have been pretty realistic. And I think that's also part of the benefit of this Engage structure and part of the benefit of this sort of Atlanta ecosystem we're riding on, is there's a trust amongst all of us that we're working together to help that startup, tee them up for success. And so
I think I haven't heard anyone say, I need to see a specific revenue threshold. I think what they want to hear is, if we roll this out and it works, we can't just roll it out for one of our customers, right? How are we going to get this on a path so that we can have all of our customers access this? And what is that startup going to need? And where are they going to get those resources? And what's a realistic path to get them there?
Yeah, I would agree. I think, I'd maybe give a little story from a lesson learned. So yes, so Blake's exactly right. From a corporation standpoint, there is no metric that we're looking at in terms of, monthly revenue, etc. What we want is to look at the capability. But what I would say is the startup needs to have enough that they would keep the focus on what is more important. And I'll just share a story where, we were working with one startup and we were looking at a proof of concept in an area. And it was pretty much a handshake and so forth, and it didn't work out in that area. So we said, okay, let's go look at another area. And that startup was pretty insistent now on getting paid for the POC that we did in area one. And it was, look, I don't want to be facetious per se, but it was such a small amount of money that I think the startup was missing the opportunity at hand. So again, there is no magic number, but I would say just make sure you have enough that you could stay focused if you're working with a corporation on what's more critical, which is getting your solution and the value of that solution, and then getting that corporation to basically become a client.
What would you think that is best for a founder that is trying to connect with you to pitch a product? Is to go directly to the innovation department in the corporate, or with the specific area that the startup will solve their problems? Or I'm asking because David is asking how do early stage companies best navigate corporations to find the right people to pitch their ideas, and sometimes it's one of those areas is or the innovation department, or is the specific area that they are trying to make an improvement on. What do you think about that?
I'll let Dave speak. Go ahead.
Yeah, I think I'll just repeat some of the things we've said before and add to it. Is that for me, when someone comes to me, even in our organization, and says, I found this company, I want to partner with them, I'm always going to go back to why. What is the problem? What are we trying to solve? We don't want to double our tech debt internally by just partnering with someone because, and we want to make sure we are getting a diverse perspective globally on the best way to solve that problem. So I'm going to do that due diligence every time. So just because there's been a cold call or someone says they would like to, it doesn't mean I'm just going to follow that blindly. I think it's more so, as Blake said, it's those warm introductions to people that know the challenges we're trying to solve, and bring warm introductions of people that they are giving credit to. And ideally, 2 or 3. Ideally, we want to see folks from maybe from around the world, different organizations, whatever it might be, for us to do our kind of due diligence on it. I think just doing that cold call, thinking because you've got a nibble, it's a done deal, it's wrong, and that's going to take a lot of time. You want to make sure, as I said, it's truly understanding the problem we're going after and being a partner to solve that. So I just can't stress that enough. Where I found startups to be very successful is when they go down that path and they have working product. It's not vaporware. Because again, what people miss is they think they can oversell what they have. We're going to find out. We're doing our due diligence, and 3 months later we find out, well, it doesn't quite do what was said. Well, now we just wasted 3 months, and it's going to hurt the startup more than it's going to hurt the corporation. So I just kind of emphasize those kind of points to make sure you're getting that best runway leverage from myself.
The other thing I'd emphasize, we have this great vantage point because we invest out of one fund, our early stage fund, that's purely for capital appreciation, and then we invest out of this engaged fund. So we get to see kind of that balance. And one thing I would say that just because they're a big company and a big logo doesn't necessarily mean you want them as a customer. So one of the things we focus on the investor side of the equation is we focus hard on what is their right go-to-market strategy, and when is the appropriate time to add enterprise to that go-to-market strategy. So, one of the questions you have to ask is, are you at the right stage for all the things that Donnie and Dave talked about? And then what is that ideal customer, for you? So on our side, part of it is we work with them to identify, which are the right customers and which is the right order for them in their go-to-market strategies. And again, sometimes it's not just a pure customer relationship. Sometimes there's a opportunity to partner somehow or to leverage each other somehow. You know, Donnie mentioned some of our startups that are may have a very specific go-to-market and a very specific product or service they sell. But there might be an opportunity for, say, Invesco or one of our other corporate partners to work together with them on, for example, the data side that makes accomplishes a goal across the board. And then again, just one more shout out for one of the things I think is unique about Atlanta and our corporate partners. The fact that we're all together here, right? Talking about Engage, talking about our partners, Invesco. In Techstars Startup Week, which is sponsored by another Engage partner, and obviously Techstars Atlanta, supported by Cox. We just have this incredible ecosystem. So one of the things I'm just trying to get across to the entrepreneurs here is that this platform we set up with Engage, the spirit of these corporate partners in trying to help drive their innovation needs, is really unique, and it's really collaborative. So these things that we're talking about, while they're risks and negatives, we've actually set this ecosystem up on purpose, right? With these support mechanisms to help the startups, and also to help them interpret the feedback they're getting, and help them overcome some of these barriers that we're talking about.
Yeah, I think that's great advice, because usually like the mindset is that if I'm going to partner with a corporation, I need to be ready, I need to have these milestones, and it's a one-shot chance to connect with them or not. But in the panorama you are sharing with us, is not about only one shot. It's about having that connection earlier enough to exchange information, collaborate, support each other, and find later opportunities to maybe be a supplier of the corporate, maybe they can invest in us as founders, or any other opportunities that can be part of the vision of this relationship.
Yeah, and so for the entrepreneurs out there, I would love for you, reach out to us at Engage, reach out to Techstars here in Atlanta. I mean, we all want to help, and so that's a way we can also help take these broad questions and apply them to your specific, unique circumstances. And we work with companies from the very earliest of stages, seed stage, on up, Series A, Series B. So we've worked with a broad range of companies. So we're ready to help and want to meet you.
And I think that answers Amber's question on the audience, that what are the factors that you wanted to review in order to contact with the corporates. But it's that, Amber, please engage with Engage and discover what is the thing that you can do together. It could be try a prototype, try a pilot, or maybe just exchange information on the market. I don't know. So don't feel shy about looking for those connections. We are about to be on our time limit, and before we all go, I would like you to invite our panelists to perhaps share an extra piece of advice to the founders in order to connect with the corporates, or any other thing that they want to share with us.
Go to engage.vc, and you can learn more about Engage, and we will, we'd love to know what you're working on.
Yeah, look, I will say go there, and hopefully Invesco gets to see some of you soon. So thank you.
Yeah, I agree. Sums it up well. Thank you, everyone.
Thank you, everyone, for joining us. Thank you, Dave. Thank you, Donnie and Blake, for sharing this important information with all the funders. Hopefully, we can find in Atlanta more connections between startups and Engage, and leverage all the panorama for Atlanta community. Thank you.
Thank you.
Thank you, guys.
Bye.